Coming up in this week's episode, we're going to be taking a look at the latest swap rate chart and what that might mean for mortgage rates going forwards. We're going to be taking a look at the latest lender criteria changes and how those changes might impact people applying for mortgages. We're going to be taking a look at the latest UK GDP data, and I'm also going to take a quick look at the crisis that's happening in the Red Sea and try to explain a little bit about how that can potentially affect mortgages. And lastly, at the end of the video, we're going to cover all of the lender rate changes this week, and there has been a huge amount of them, which is positive news. So stay tuned. Hello, everybody, and welcome to the UK Mortgage Market Insights for the week ending the 12th of January 2024. I hope you're all well. So let's start by taking a look at the latest swap rate chart. So as always, we're looking at the current column, and we tend to focus, as you know, on the 2 and the 5 year rates because those tend to be the most popular products in the marketplace. A reminder that swap rates are not the actual mortgage rates that you get. This is the cost of money to the lenders, and lenders will put their margin on top and then offer the products to you. This last week, there has been a little bit of fluctuation in the swap rate, and you will notice if we focus on that 2 year column, it's currently sitting at 4.2%. And at the end of last week, it was around about 3.9%. So slight increase this week, and I will come on to this later on. But it does go to show that the market can fluctuate very quickly and that you just never know what is around the corner. So when a mortgage broker is saying to you, review your options now and take advantage of what rates are available now, they're doing that for a very good reason. And that's because good mortgage brokers will monitor swap rates as an indicator of where rates might be going in the near term. Next, let's take a quick look at some of the lender criteria changes that have happened this week. So first of all, we've got Santander, and they've made improvements to their affordability calculations following the change in the rate of national insurance contribution. As you may or may not know, the rate at which we pay national insurance contributions reduced from 12% to 10%, which means that we do have a little bit more money in our pockets on a monthly basis. It's not a huge amount, but it is an improvement. And Santander have made changes to their affordability calculations, taking this into account, meaning that you can potentially borrow just a little bit more money. Mansfield Building Society have made improvements to their follow-on rates. That's the rate that you will go on to if you do nothing once your fixed rate or your tracker rate has ended. And this has had the effect of, again, improving affordability for the Mansfield. Halifax have introduced a new product transfer facility, and this is really useful to people that have previously been with the Halifax and have ported their mortgage from one property to another. So you might have 2 fixed rates on your mortgage, both with different end dates. Now, the Halifax have introduced a policy so that if your end dates are within 6 months of each other and you apply for a product transfer on a new product on today's date, for example, they will honor that product when your second part of your mortgage expires within the next 6 months. So you can have the same rate, same end date, and everything. So that's a really positive change from the Halifax. Paragon have improved their ICR calculation of buy-to-let mortgages, again improving affordability. And this is focused mainly on those people that are taking 5 year fixed rates. And lastly, West Brom have announced some changes to their fixed term contract policy. And they've also made changes to the contracts that professionals such as doctors, accountants, teachers, etc. could be on. So a few positive changes from a variety of lenders this week. So next up, let's take a look at the UK GDP data that was released this morning, covering November of last year. So the real gross domestic product is estimated to have fallen in the 3 months to November 23 compared to the 3 months to August. Monthly GDP, however, is estimated to have grown by 0.3% in November 23, following a fall of 0.3% in October of 23. Services output, which has been the main contributor to the growth, saw a 0.4% increase in November of last year. So this data is potentially suggesting that there could be some changes to when the Bank of England might make their first base rate cut this year. As you know, if you follow this channel, we do cover this on a regular basis. And in some previous videos, we were talking about when this first cut in 2024 might happen. Some people were predicting it could be the first quarter, and that was it looked like the UK was in recession. This data is showing that the UK is not in a recession, even though it might feel like it. And therefore, as we predicted, it's looking more likely that the first base rate cut could come in the second quarter. And we think that that's likely to be at the meeting of the Monetary Policy Committee in May. Now, I don't know how closely you follow world events and the geopolitical landscape, but the reason for this channel is so that we can show you just how world events can actually have a massive interaction on the UK mortgage market. It really does go to show how small the world actually really is. Now, you may or may not know that there is a massive crisis in the Middle East. We've got all the ongoing conflict with Iran. And basically, there's some trouble in the Red Sea. Now, attacks by Iran-linked rebels in the Suez Canal and the Red Sea are having a massive impact on shipping. Now, big companies are already having to reroute their vessels around the Cape of Good Hope in Africa. This is making journeys 40% longer. It's increasing the time and the distance of the journey, which is therefore having a massive impact on the shipping companies' fuel costs and therefore the price to the consumer. Analysts are warning that this ongoing crisis could trigger a second wave of global inflation, which is something that is of real concern. This is partly the reason why we've seen the swap rates increasing over the last week or so, because there is a lot of unrest around the world, and those swap rate increases are having an impact on the UK mortgage market. For this week, we've had one lender withdraw rates from the market and actually increase the products. So this is why, as I said at the beginning of the video, when you're talking to a broker and they say, please look at your options 6 months in advance of your rate expiry, they're doing that for a very good reason. And that's because you should always treat today as a worst case scenario. Whatever rate you secure today is always going to be on that worst case scenario. Because if rates get worse, then you're okay. You've secured the best rate for you. If rates increase, it won't affect you. However, if rates decrease further, then the mortgage broker can monitor the market and we can then swap you over to a new lower rate product. So whatever you apply for today is always going to be the worst case. Things could improve, but they will not get any worse. So as you can see, events that happen around the world do have an impact on the UK mortgage market. So it's really, really important to listen to brokers like ourselves that do monitor worldwide events to bring the news to you to show you what we think is going to happen with interest rates in the near future, because it helps us to provide you with better advice and a better service. So what's happened with the lender rate reductions this week? So despite the fact that there's been a little bit of fluctuation in the swap rates, we have still seen lenders decreasing their rates. This is bringing them into line with all the other lenders. It's all about where they are in the rate charts rather than anything else. So they have tried to bring themselves into line, obviously within reason and within the boundaries of the swap rates. So huge amount of lenders this week. So are you ready? We've got Landbay, Coventry reduced their rates twice. Accord, Co-op, Paragon, Bank of Ireland, Principality, Kensington, Nottingham, Virgin, Foundation Home Loans, Precise Mortgages, Lendinvest, Santander, Barclays, West Brom, Kent Reliance, Skipton, Halifax, BM Solutions, and Fleet Mortgages. All lenders reducing their rates, which is fantastic news. So if you are looking to remortgage or if you are thinking about purchasing, now really might be the right time to do it, because things are really improving as far as mortgage rates are concerned. So that brings us to the end of this week's episode. Thank you for watching. Hopefully you found the information useful. As always, we really do appreciate interaction, so please do make comments on videos. And if there's anything that you'd like to suggest, anything that you want us to cover in future videos, then please do let us know in the comments section. As always, the links to the relevant articles will be in the comments or the description notes. But as always, thanks for your support. We really do appreciate it. Have a great weekend, and I'll see you next Friday. Take care.